Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist. You can see I already have up the charts here for the Game Plan, and I wanted to do this because we are seeing a big move up in the markets, at least initially on the back of the CPI data. So if we take a look at the CPI data here, you can see month over month, we came in less than expected in terms of inflation. All right, CPI month over month, 0.1% versus 0.2% forecast year over year, 2.4% actual versus 2.5% forecast. And even core, which excludes food and energy, was 0.1% versus 0.3% expected. So again, folks, ultimately, we are seeing inflation that still isn't showing anything yet from the tariffs. I still do think that we will see an uptick in inflation later this year, as again, and I've said this before, but remember that businesses bought a ton, and I repeat, a ton of inventory ahead of the tariffs, and they're still working through that. They haven't yet had to say, okay, let's go buy massively at these higher levels in mass, and therefore, again, they're able to keep the prices semi-muted. Now, again, it's not to say that we're going to see a huge rise in inflation, but again, when you jack up tariffs by, let's say, I think there's an average of 12% across the board, at some point, we all have to admit that the companies themselves are not going to eat that, right? As much as Trump might push them to do that, it's very unlikely that they will eat those tariffs. They're going to pass it along to you and me, and we'll see that in prices over the next 6 months. All right. So again, CPI data came out today. We'll continue to monitor it. If we flip to the charts, take a look. We initially had a big spike up in the S&P, although look, we are starting to come in. And I am seeing some cracks that are emerging in a major way, guys. So for instance, last night, we saw news hit that there was a tentative deal with China on rare earths. And again, some different good stuff there. What did we see? The futures barely budged. All right. Now, why is that important? Well, historically, if you go back the last 3 months or so, any trade news, especially with China, would see the S&P future spike up. We didn't see that last night. This morning, all right, if I flip back to the charts here, right here, we had more news about the Chinese deal. It's going to include magnets and rare earths. The U.S. in turn will allow students to come to the U.S. The tariff rate on China will remain at 55%. The markets initially kind of popped, then dropped, and are stabilized right here. All right. So again, trade news, and this is something I've told you guys before, right? We've talked about how trade data and news is becoming less and less important because the markets are becoming more and more immune to it. It's just like, hey, listen, this is more white noise. Yeah, there's a little bit of a positive here, then there's a little negative here, then there's a threat here, etc. The markets are becoming more and more immune. What the markets are looking for, though, is economic data. Again, how strong is the economy? Friday, the non-farm payrolls number came out relatively strong compared to estimates. But again, what did we see? The last 2 months revised down by almost 100,000 jobs. And so it was kind of a neutral report. I would call it neutral. You know, again, the headline number was good, but then if you look at the underbelly, the participation rate was lower as well. Participation rate, when it goes down, that's not good because it tells you people have been looking for jobs and they're finally starting to give up and taking themselves out of that unemployment number, right? So again, that's an issue as well. So in any case, markets did pop pretty nicely initially on that CPI report. We are fading back down just a little bit. Let's watch very closely where things go. If we flip over to the S&P 500 and go to the daily chart, notice again, we're setting up to open just slightly higher today, about 20 points to 25 points higher on the S&P, and we are just slowly marching or grinding towards that all-time high. Now, remember what I've talked about here, guys, is that we are coming into a cycle, a major cycle date that, again, is essentially end of this week, early next week. So, again, anywhere between, I would say, Thursday, Friday, Monday, Tuesday, Wednesday. It's a general zone, but we want to watch that. And I happen to continue to say, and I've said this in the game plans, watch very closely. Does the S&P kind of get up to that double top, maybe pierce the double top, and then the cycle date hits and we see the rug pull come in on the markets and we start to turn down. And again, we're seeing cracks emerge. Now, what would some of these cracks be? Well, if we go back to the S&P futures, this is something that's interesting, right? So we spiked higher. I mean, the numbers for CPI were very, very good, guys. They were good, very good, right? Even on CNBC this morning, analysts were saying, oh, we're going to see a higher number. Finally, the tariffs are going to come through. And we didn't. We saw lower numbers. We didn't even see equal numbers to what expectations were. We saw lower numbers. Markets reacted as you would have expected. But this is a little bit interesting. Now, granted, it's early in the day. We have to see where things pan out. But if we were to somehow close flat on not only good news from China, but also on CPI, let's say the S&P closes flat today, that would get my attention. What are some other signals that are showing up in the charts? GE, this stock, which had been on a nonstop train ride, just grinding higher, unbelievable vertical, finally cracked yesterday. Nice down move on GE. And by the way, look at this longer term trend line that I highlighted. Low pivot going back to 2022 through this high pivot here. I should say high pivot here to high pivot there. What did we just hit a few days ago? Boom. And then the drop right there. GE Vernova. GE Vernova, this is an energy nuclear kind of play. The wedge pattern has broken, right? Even names like RCL, which again have been on an incredible run, classic double top. Look at how it pierced the double top and then kind of a pseudo rug pull coming in to the downside. Now, it's not a big drop on RCL Royal Caribbean, but my point is when we're just talking about the S&P and how it might pierce those highs and then reverse, this is almost identical to what you could possibly expect to happen. It pierces, which stops out anyone that kind of was short the stock and said, okay, as long as it doesn't break its high, I'm going to remain short. Oh, it broke its high. All right, cover my short. Anyone sitting on the sidelines, wow, new all-time highs on RCL. And then what happens? Price starts to come in. So again, there's a lot of charts like this out there that are showing weak signs like that. Lastly, I talked about it yesterday. The SMH here did finally touch that secondary gap fill yesterday. And this is a big level for the semiconductors, the SMH, really big level today. We are up a little bit on the SMH, trading just a little bit higher because the markets are set to gap up. But again, I'm watching very closely to see if we see a reversal today in the semiconductor sector. And again, the semis at this point are the leaders. They are the ones that are driving this market up. The old adage on Wall Street goes, where the semis go, the markets will follow. And that basically has been true since the April low. The semis have led the rise. All right, the 10-year yield. 10-year yield, this is classic. If we were talking about a lower, yesterday we talked about how we retraced into the resistance here, right? So you had support, support, and support. It broke, consolidated, broke down, retraced to the scene of the crime, and now for the third day, we are lower on the 10-year. Why is the 10-year lower today? Well, simply put, the 10-year is lower because if inflation is lower, it gives the Fed the ability to cut rates sooner or more aggressively, right? If inflation had gone up today, the Fed would have been basically handcuffed, right? In terms of saying, all right, well, how much? Maybe we can throw a mercy cut, one cut, but we can't cut a lot because it's going to stem inflation. But as long as inflation remains neutral to lower, the Fed potentially has the ability to cut rates more aggressively. And at least on the 10-year, that's why, again, when the 10-year drops, that's key. Now, we do have a bond auction today on the 10-year yield or the 10-year treasury. Watch that. But the big one is going to be tomorrow, the 30-year bond auction tomorrow. These are going to be key. Essentially, we need to find out, as the United States, with a little bit of a black eye right now because of everything going on, how much demand is there for U.S. long bonds? All right, long bonds are 10 years and beyond, and in this case, 10-year today, but also the 30-year Tomorrow, the 30-year, there's $22 billion in bonds being sold by the U.S. government. That's going to be something that could be market moving. All right, flipping over to some stocks that are moving this morning. GitLab here is dropping. This is dropping on earnings. There's not much earnings. By the way, Oracle does report today after the bell, but in general, there's not a lot of earnings right now. We're kind of in between earnings seasons, but GitLab is falling here. If we flip over to the daily chart, it's trading right around a little bit of a gap fill here at 41.60. I don't think I'll play that because price is already into that level, but if we were to go down to 39.80, this little pivot low here, right here, I would be interested in a potential day trade. And then obviously double bottom at 38 would be an additional level. GameStop reported earnings yesterday. Their numbers were not great, but remember, this company is trying to reinvent itself by buying Bitcoin. And so again, while the stock is down a little bit, you can see here initially it sold off, and then again, it kind of has chopped around here. It is down a little bit, but there's no day trade here for me. It's not a big enough fall, especially since it has recovered substantially. All right, continuing on, let's take a look at gold. We'll look at Bitcoin in just a second. Gold had popped initially here on the back of that number, but now you're seeing risk on for the stock market. So we are seeing gold pulling back again. So remember, in general, and listen, this has been kind of interesting, right? Because generally, when the stock market goes up, what does gold do? Gold goes down, right? Because people say, oh, well, why do I need to hold gold? It's a safe haven asset when things are crazy, but the stock market's going up. So I might as well take money out of gold and put it in the stock market. So generally gold falls during periods where the stock market's been rallying. Now, if we look at the chart on gold's daily chart, it hasn't, I wouldn't call it falling, but it's been going sideways. So normally gold would do this, right? You know, from basically the beginning of April right here, gold would go like this. But instead, it's been basically chopping sideways. That to me is bullish for gold. The chart remains with it with a breakout above this level. But just the mere fact that gold has gone sideways, like if you look at, so the low on gold, or I should say the market's bottomed on April 7th, right? April 7th. This is where the stock market bottomed on this date. And look at what gold's done. It's actually net green, even though the stock market has rallied now. I think the S&P is up like 25% off of its lows. NASDAQ's up like 35%. So that is very unusual. And that speaks to, number one, that central banks and governments continue to buy gold like crazy. In fact, just this last month, China bought another massive amount of gold. But also it just tells you that even though the market rally is continuing, there's a certain group of investors who are like, hey, listen, the party can't go on forever. Load up on gold because it's most likely going higher. All right, so just interesting there. Now, silver's had that big move up. Remember, I did exit my silver long right up here. So far, that's been a good decision. It could be starting to make bullish consolidation, but I'll keep you guys posted on that. Again, upside on silver would be around 37.50. That's your first big resistance level. I would be a buyer of silver on any pullback to this level right here, 34.40, 34.50, former pivot high. Notice how price broke above, consolidate, ripped higher. So that tells me that level is going to be a good support. So again, I exited up here. If it pulls back here, I would be a buyer of silver. All right, platinum is just like palladium, is rocking and rolling. Look at platinum go, guys. Incredible move here. But again, the key is understanding that look at this chart on platinum and then compare it to gold. I mean, gold's all the way up here. Well, way further even, right? I mean, you literally have to pull this down and so gold's up here and platinum's down here. So there's a catch-up trade that's in play, and this is why I've highlighted palladium as well and said that I like palladium. Basically, if you're in palladium, you're almost identical exposure, right? Generally, palladium and platinum go together because, again, they're both industrial rare metals, about 20 to 30 times rarer than gold. But again, nonetheless, these are continuing to push higher. You can see palladium has stalled out right at this little resistance, but my guess is it finally breaks through to the upside. I'll touch on copper today as well. Copper, to me, look at this, guys. This is a very bearish pattern on copper, which is not good for the economy, right? Global economy, domestic economy. If you get a bear flag formation showing up on copper, it generally is a guide to the economy, excuse me. But in any case, you can see copper is actually down today. And again, this is an upsloping parallel. You also have this bigger down move. So I actually think you have all these resistance, gap fill, upsloping trend line, parallel line. I actually think copper is going to break down here in the not too distant future. So again, keep an eye on that. All right, oil, guys, we got to talk about oil. How long has it been since oil actually did something? Well, guess what? It is doing something today. I did pull the trigger this morning on a short trade on oil, just a starter position. I've been telling you guys as it's been chopping all in here that, hey, listen, once it gets in here, it doesn't mean it's not going to go a little bit higher, but this is where I dip the toe in the water on the short side of oil, right between basically right above $66 a barrel. It's trading at $66.21 right now. And again, please understand, it could go a little bit higher. There's no doubt about it. But again, dipping the toe in the water allows me to add if it goes here, and start setting up for that bigger play that, again, you have a down move, bear flag, down move, bigger bear flag, and it could go up a little higher. But eventually I see downside on oil. Natural gas, we'll touch base on that. Then we'll flip over towards Bitcoin. And natural gas, again, small bounce. Again, just up, down on the charts. Not much going on there. And then lastly, Bitcoin, folks. Bitcoin is pausing. It paused yesterday. It paused today. Watch to see if we get one more move up into this level. I would not be surprised based on how it's trading right here. If we get one more move up, and kind of get up to 113-ish, give or take, on the chart of Bitcoin. All right, I'm going to flip back to the ES futures, the S&P futures, still kind of hovering here. Again, big move up on CPI, but have since kind of mitigated that and have just stalled out. Again, watch today. Remember, if you're watching the markets, you're looking for the cracks or the tea leaves, right? You're looking for little things that aren't doing what they should do. Today should be a good rally in the S&P 500. It really should be. You have kind of a framework for a deal with China. We're getting rare earths again. We're kind of on, you'd assume, better terms with China than we were a month ago. So that's a positive. Then you look at the inflation data. That was better than expected. That's a positive. Today should be like a 1% update on the S&P. If by chance, listen, if it's up 0.5%, doesn't matter. I mean, that's kind of in that range. If we're flat on the day or negative, that's where I would say ding, 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 ding. Something here is now not behaving as it should. We could be looking at a bigger move in the downside category coming in the markets. All right. So just my few words of insights today. As always, folks, thank you guys for tuning in. I do appreciate it every single morning. You guys are rock stars for supporting me on a day in, day out basis. I will, of course, keep you posted, and I'll be back bright and early tomorrow to do it all again. Take care.